Hey guys, welcome back to the channel. Today I'm going to update you on a personal journey I started 19 months ago, my 100,000 euro saving challenge. The idea behind this challenge was simple. I wanted to test the claim that reaching your first 100,000 is life-changing, a concept that has become something of a mantra in the personal finance space here on YouTube. Now, don't get me wrong, I have a lot of respect for the wisdom of people like Charlie Munger who emphasize the importance of getting to the first 100k. I don't doubt that it is a powerful milestone, but here's the thing. I have always felt that the way this achievement is portrayed online can be a bit misleading. Too many videos make it sound like once you hit 100k, you're suddenly on a rocket ship to millionaire status. That's why I decided to put it to the test in real life with real numbers and zero fluff. In this series, I've been documenting the process, the ups and downs, the mindset shifts, and the habits that have gotten me closer to the goal. And today, I'm going to update you on where I stand and what I've learned so far. So if you ever wondered whether hitting your first 100k is really the turning point everyone say it is, stick around because I'm finding out firsthand. Alright, let's dive into the numbers and take a closer look at the dashboard I've been using to track this 100k challenge. This is where I document everything: savings, investments, returns, full transparency. Let's break it down from top to bottom. I started this challenge 19 months ago with the goal of saving at least 1,000 euro per month. So averaging 2,043 euro per month is honestly more than I ever expected. This was possible thanks to consistent budgeting, cutting unnecessary expenses, and staying focused on the bigger picture. As of now, I've reached 42% of my target. I have saved roughly 39,000 euro and earned over 3,000 in gains, which is around 8% return of the invested capital. At this pace, I'll estimate I'll hit my 100k goal in about 2.5 years. And then, a millionaire status? Well, we will see about that. Now let me show you how my portfolio is allocated. It's intentionally simple and built for long-term growth. The core of my strategy is investing 81% of my capital in an accumulating ETF tracking the S&P 500, which has returned around 8% so far. Next, 13% is parked in the Trade Republic cash deposit, which acts as my emergency fund and has returned almost 300 euros so far. And since the end of last year, I have also added some gold exposure through a gold ETC, about 6% of my portfolio as a hedge against volatility. The last sliver is from cashback, using the Trade Republic card, which gives me 1% back when I spend and invest automatically. Now, let's talk about what the last months have taught me so far. At the end of last year, my portfolio was up 17%. Then came the chaos with the tariffs, and all my gains were wiped out. Despite that, I kept investing regularly. I even used my remaining cash to try and buy the dip. In April, I had just 1,000 euro to invest. But by May, when I had 6,000 euro ready, it was already too late. Lesson learned: always have liquidity on hand, not just an emergency fund, but a separate opportunity fund for when markets drop or amazing deals come along. If you compare the S&P 500 index performance or gold futures to my portfolio, you'll see a noticeable difference. The difference? It comes from the euro-dollar exchange rate. My ETF and ETC are not currency hedged, so when the dollar weakens against the euro, my returns take a hit. In this table, you see the difference between my ETF in red and the same ETF currency hedged in blue. The difference is about 10% less in performance. I knew already this risk going in. Hedged products are more expensive, and as long-term investor, I believe that these currency swings balance out over time, so for the moment I'm not worried. But as my investments grow, this exposure becomes more significant, and it's something I needed to address in the near future. From the start, I knew already diversification would be essential, and now more than ever I'm thinking about how to broaden my strategy beyond just the US market and the dollar-denominated assets. So I'd love to hear your thoughts. How would you diversify this portfolio moving forward? Drop your ideas in the comments here below. That's it for today. Thanks for watching this update. If you found this helpful or inspiring, don't forget to like and subscribe to follow my journey to 100k and beyond. Have a nice day. Bye!